We have Manish Jain from Centrum PMS to talk more about markets from here on. Afternoon, Manish. Good to have you back on the channel. Good to see you. So, what's the hypothesis? How have you crafted the portfolio at Centrum PMS? Talk to us about the framework which you have set here for our viewers.
Well, hi Ajay, thanks for having me. Wonderful to be back. By and large, the philosophy continues to remain absolutely unchanged, which is to focus on quality and to focus on risk and reward, right? So basically, what we are trying to achieve over here is a sustained long-term wealth creation goal where we invest in companies and businesses that have an impeccable track record as far as corporate governance is concerned. Not so inclined, towards very short cycle businesses, but cyclicals in general tend to find a way into our framework. And basically, looking right now with the way markets are poised, it's more of a bottom-up, strategy where we are not focusing as much on the index levels. We are not focusing as much on sectors as we are individual ideas which are more bottom-up driven, where we are focusing on risk versus reward, valuations versus growth. The effort is to try and figure out ideas which are more evenly balanced, looking at sectors like auto, chemicals, NBFCs, affordable housing, all that space which we find where we can, place these ideas which are more appropriately priced at this moment.
Okay, sure. Let me come to some name which I find very interesting in your micro cap part of their portfolio. There are some names there which are very uniquely poised. The only vineyard company listed, but I'll not talk about that name. I want to talk about the concept here, the concept of wine tourism in India. Do you think it's a scalable business? From a single location wine tourism spot, do you think it can be scaled across the country? And what appears to be a richly valued company right now, perhaps going forward once it kicks off, because new genres getting added, women, their consumption on the wine side is only going up, all of that. What is the hypothesis that you picked that name?
It's a classic play on lifestyle, right? As urbanizations increase, as the GDP growth rate continues at a certain pace, a per capita income will also continue to move up. Affluency, especially at the top level in the top 10 metros, will continue to rise over here. As we move from what we are today, which is roughly about 2,500 odd dollars in terms of per capita GDP, when that number moves to 4.5, 5,000, even by the time we are about $7 trillion odd dollars kind of an economy, by the time we finish this particular decade, I think what you realize is lifestyle changes are going to even accentuate further. Conspicuous consumption is going to pick up even further. Leverage consumption is going to pick up even further. We've seen these changes that have happened in terms of the consumer preferences playing out in autos, in housing. And what we feel over here in Centrum is that liquor is a play which is very, very similarly poised, which is basically going to be discretionary consumption. People will keep moving up the value chain. It becomes a very classic lifestyle play. And the premium end will, of course, grow much faster as compared to the rest of the market, which seems to be a little more saturated. So if you're able to find something which is very uniquely positioned, which can be distributed through a very efficient channel at a mass market level in the entirety of the top 10 metros, I think that's the game over here. And this is what you've seen in terms of growth till now. And not just at the company level, but specifically at the industry level also. It's just the tip of the iceberg, and this will continue to rise going forward from here onwards. It's a decadal story. It's something that I would buy it and forget that I own in the portfolio from a 5-10 year perspective. It's an industry which everybody needs to own.
Manish, what are your thoughts on sticking with lifestyle on some of the very unique companies which actually operate luxury malls, or not exactly luxury, but malls for the affluent? We have seen, some of these malls were there in Bombay, right? But up till now there are 30 more towns which are being identified as upwardly mobile in terms of affluence. And this company, the unique company which we are talking about is the mall operator, real estate. And now they are expanding to the B30 market. Do you see this also becoming a big, picking up footfalls and all of that in the next 3 to 5 year period?
Absolutely. If you remember, we go back to the time 2020, there was this term which was coined, which was K-shaped recovery. And we were all very focused as far as corporates were concerned in terms of K-shaped recovery, the big getting bigger. But if you look at the last 3 odd years, there has been a lot of volatility as far as rural demand is concerned. But if you look at the urban consumption, if you look at the top end, the luxury, the premiumization story, that continues absolutely unabated. And that just shows how affluency has continued to rise and sustain at the peak levels, right? At the top end of the level, talking about the top 1, top 5% sort of a population base. And this is a space which will continue to get richer and richer. So some of these industries which are a play on this, which can be, for example, retailing, it could be eating out, it could be autos, it could be real estate, and then it could be these malls as a play. I think are all stories which are here to stay, and all of them are going to continue to play out over the course of next 3 to 5 years. So yes, if I have a India portfolio, if I have a portfolio which is going to be leveraged on the India growth story, then yes, these are the names that would find a place in my portfolio.
How are you playing NBFCs? What category of NBFCs do you like? Are these SME oriented ones, housing finance, consumer? What exactly in SME do you like? In NBFCs do you like?
I like everything, right? But what we are trying to pick here are the ones that are more appropriately priced. I mean, at this juncture, I wouldn't want to pay, say, 6 times, 7 times, 8 times price to book to build in a fresh position into an NBFC. But other than that, I think when you look at the risk reward and the balance between banks and NBFCs in the coming cycle in the next 1.5, 2 years, I think from an asset quality perspective, capital raising perspective, deposit mobilization, I think NBFCs in general we find are much better placed as compared to banks, which may have pockets which are absolutely priced to perfection and very minimal upside surprise left in them from this point in onwards. And that's why the inclination more towards NBFCs, which can be a leverage play on consumption, on housing, several sectors, and yet give you that flavor of the BFSI.
Okay, so before I let you go, I want to understand the 3 portfolios you're running. What is the kind of earnings growth each of your portfolio has for the next 1 year period, 1 year forward earnings growth estimate versus the valuation the portfolio is trading at right now, just for my own understanding?
No, absolutely. What we are looking at from a portfolio perspective, when you look at all the 3 portfolios that we are running, I think by and large, we should be expecting somewhere close to a 20% sort of a earnings growth coming through in the next 4 quarters. But mind you, what will happen is that for FY25, the growth is going to be more back-ended rather than front-ended. So Q1 and Q2 might actually be a little more sedated, might be a little more challenging. But going forward into the second half of the year, I think there's still a lot of growth room left, and that's where I think the majority of the pickup is going to happen. Of course, valuations are now looking like a little stretch because of the run-up that we have had in the mid-cap and the small-cap space, which is where traditionally our portfolios have been kind of oriented towards. We've had between 60 to 70% run up in that space. So, and that's why the shift in the strategy, which is going to be about trying to reorganize the portfolio wherever we feel that the valuations are at, one standard deviation above from the long-term average, kind of start booking a little bit of profits over there and redeploy the same money into stocks which are a little cheaply priced at this moment, where we do feel that the balance is far more even and have a very bottom-up driven strategy. But earnings growth momentum looks like it's going to be here to stay. It's very strong.
Right. All right, Manish, we'll let you go on that one. Thanks so much for joining us on the show today.
Thank you for having me.
Well, that was Manish Jain of Centrum PMS talk to us about how they're approaching the market, some of the areas which they like.